so that we can just start straight up. All right, fantastic. All right, I can see you guys. You guys are wonderful. You guys are wonderful. You guys are great. How many participants do we even have in total? Safe. Some people are leaving. I don't know why. So so let's just get started. Don't let me waste much of our time. Let's just get started. So yeah. So this particular program is designed as a monthly program that I'm going to be doing to keep you guys engaged. And at the same time, this one is even different because this is the first of its kind. And what we are going to be doing tonight is that I'm going to be teaching you guys and explaining to you guys how ICT concept really work. This is a concept that most people have been trying to wrap their heads around, right? So it's a very, very complicated concept, yet still highly profitable. In fact, it's a very, very profitable strategy, right? Very, very profitable strategy. And if you know what you are doing and you know how to approach this concept, you will not have any issue with it. You will not have any issue with it, right? It has a very, very high win rate. And tonight, I'm going to be helping you guys navigate what this concept is all about, how you can approach it. In fact, I said it, this session is meant to be a paid session, but I'm giving it out for free because this is first of its kind for unveiling the market, right? So we might be having psychology sessions later on over the years in some other months, right? And we might be having some other sessions that might not I don't know if you are getting it now. So that might not necessarily be relating to psychology. So, but the purpose is just to help you understand the financial market and also help you become a profitable trader. So it's like a mentorship series, right? Mentorship live session series that we are going to be having to engage traders. So tonight we are going to be talking about structure, market structure, factual nature of the market, break of structure, strong highs and weak lows, weak highs and strong lows, right? Change of characters, fair value gap, liquidity void gaps, other blocks, mitigation, entry, putting it all together, dealing range, institutional pricing, liquidity, internal and external liquidity, concept of noise in structures, market maker X model, PDRA metrics and complex structure, trade management. And we are also going to be talking about either data range look back period. Although these videos I already have some of them available on my YouTube channel for those people who are literally a paid student. Those people who actually have access to my, paid resource, right? So most of the videos I literally already have them available, right? So, but one thing we are going to be doing tonight. All right, Daniel Laurenfemi, you are welcome. One thing we are going to be doing tonight is that I want to I literally want to teach you guys a whole lot of things within the space of under 1 hour, right? So if you know what you are doing, you want to get your pen and jotter by your side, right? Because in fact, I'm very, very sure after tonight's session, you will not see ICT concept the same way it is, right? Or the same way you have been seeing it, like you trying to wrap your heads around it, the hard, the harder things that you have always seen ICT concept to be like, right? You won't see it that way anymore, right? So now, without wasting much of our time, let's just get started. So now, I believe you guys are not new to trading. By the way, this is a FX replay, bar replay tool, uh, bar replay through software, right? You can use it for back testing and you can use it for testing your strategy. So you guys are not new to structure. You guys are not new to the financial market. What do we talk about when we are talking about structure? So when we are talking about structure, this is typically a break of structure. We all know that, right? This is like a break of structure. This is a break of structure because price broke this high. This is lag swing low. Most of you are not new to market, so I don't need to be teaching, wasting time on break of structure, right? You all understand structure. You all understand market structure. And I like to believe that you understand the fractal nature of the market. The fractal nature of the market will make you understand the fractal nature of the market will make you understand the fact that, the same way this structure is appearing on this time frame, right? If you are to zoom into a smaller perspective, our price is moving upward. There is also smaller structures forming, right, as it is going upward. And as it is coming down, there is also smaller structure forming as it is coming down. I don't know if you guys are getting that. And as it's going up again, depending on the time frame, right? So it's telling you that the market is fractal. It is the same both on the larger perspective and on the smaller perspective. So I don't really need to waste much time on that. If you get that, if you understand that, please can you just drop some emojis? If you already understand structure and fractal nature of the market, this is not for basic or beginner traders. So I believe you guys already understand what structures is. All right. Okay. Someone raised his or her hands. Oh my God, Jesus. So you guys were not seeing my screen on this. Wow. Wow, I forgot to share my screen. I was rushing. I was rushing big time. All right, let me share my screen. But can you hear my voice? Can you hear my voice? Wow, that's very very painful. Like that's painful. That's painful. All right, so you guys should be able to see my screen now. Can you see my screen now, please? You guys can see my screen now. All right, that's that is fantastic. So it is well. Thank God I haven't gone far, right? So if you guys have any issue, please make sure you are voicing it out. All right. So now here it is, right? Here it is. You can see structure, right? You can see the structure. Don't worry, there is the recording. So in the recording, you are going to see what I'm really talking about, right? So this is an example of break of structure. So if you understand what I mean by fractal nature of the market, fractal nature of the market is telling you that the same way price is on the larger time frame, it is also like that on the smaller time frame. So as price is moving downward in this case now, it's also forming downward structure. As it is moving upward in this case now, it's also forming upward structures too, right? So if you guys understand fractal nature of the market, break of structure, all those basic things, can you just signify? Can you signify with some emojis, please? Can you signify? Don't let us waste too much of time. Okay, Femfem is raising his hands. All right, I can see Gospel Dixon. I can see Gospel Dixon. Which other person? Which other person? Come on. Is the only one person that understand? Okay. All right, fantastic. So now you guys need to be very, very sensitive tonight because I'm going to be teaching things that are very, very important to make your trading much more effective. So now there is a secret template to creating any strategy. And this secret template, if you understand it, you can use it around any strategy. You can create any strategy and it will be profitable. Now, what is the template? This is the template. The template is number one, trend. Sorry about that. Trend. Number two is POI. POI strategy can be anything, right? Number three is entry. Sorry, entry, and number four is exit. So you must, it means you must have, this is not just a template for building any strategy, it's also a checklist criteria when analyzing the market. So but to build any profitable strategy, you must have one trend highlighting strategy. It can be market structure, it can be trend line, it can be moving average, it can be which other trend highlighting strategy we have, it can be support and resistance too. Just pick one out of it, and this combination works like every time, but the win rate of strategies might differ from each other, right? So but it will work, right? Your strategy will work most of the time. At least you get a strategy that has like 40% win rate, which is still fair, right? By the way, the strategy I teach is about 60 to 70% win rate. That's for the chart pattern strategy. I have a course on chart pattern which is also relating to some concepts around ICT concepts. It's just like a simplistic way to trade ICT concept, but not in ICT concept chart pattern, right? But it's still the same concept applicable to ICT concepts, which is what I'm going to be teaching tonight, right? So, but now you are now using structures, other blocks, fair value gaps, and so on. You are not simplifying it to pattern, right? So it's also very, very good. ICT concept can be a very, very profitable strategy of win rate around 70 to 80% win rate if you know what you are doing, right? So now the first checklist is trend. Second checklist is POI. Second strategy like that you must have a trend checklist, trend strategy, trend highlighting strategy. Number two, you must have a strategy. Huh? What did you say? Who was that, please? You can't do what? Can you just type it in the message box? I cannot hear you properly. All right, you can't. You can see the screen. Okay, okay. That I think it should be a network issue from your end. All right, so let's just proceed. Right, I was expecting more people than this. We had like about 11 participants, but yeah, it's still nice regardless. Many are called, few are choosing. So now, POI selection strategy. Your POI selection strategy now can be anything. It can be other blocks, it can be supply and demand, it can be support and resistance. Just pick one, too. Like, just pick one. You are building a strategy by selecting one of this, right? Your entry strategy can be change of character, it can be candlestick, what are they calling it? It can be candlestick pattern. Sorry about that. It can be candlestick pattern, it can be what other entry strategy we are, it can be even be moving average, right? So it can be anything, just pick one. And your exit strategy uh can, is also relating to your strategy, break of an eye or whatever. And trade management is also coupled with exit strategy. I would like to teach this later on, right? There's what I call the big retracement theory, right, which will help you know when market is not in your direction. So when market is no longer with you, so you have to sharply close your stuff as sharp as possible, right? So now, okay, don't let me delete that, let me still leave it on the screen. So now, using this, for you to trade ICT concept easily, I don't want to use some terms to make it so simple, because I say I want to teach a lot within the space of 1 hour, right? Under 1 hour. Like, I'm repeating that big time. Under 1 hour. So now the first thing you need to do is to be able to identify your structure. That is our trend highlighting strategy. Your structure is the most important stuff, right? Structure is important. Like, as you can see on my screen now, this is a bullish structure. Like, price literally broke this high. Shebi you guys can see that. And we are going to be taking practical example. So now, for strong highs and weak lows, you know that after price break a particular high, if price break price up, high upward, then you are not really expecting that when price is coming downward to come and touch this to anywhere around here, you are not expecting that it break this low. What you are expecting is that it reach somewhere around here and then it reverse, right? So that's our natural expectation. So we are expecting that it just comes all the way downward, right? Just come all the way downward, then reverse to continue in that direction of that trend. And that is what I call institutional order flow naturally. But I don't want to use terms, right? But when you see a break of structure, when you see that price created a structural point, what you're expecting is that price continue to create another structure moving in that direction easily. And this is the basics of ICT concept, right? It's the basics of the total basics of ICT concept. You must understand this. So now this brings me to the topic called dealing range. So now, what is dealing range? After price break a structural high, price broke this high, right, you look at the last point that formed after the break of structure, right, between that last point that formed, right, and the last low for a bullish scenario. Now I might be using bullish scenario through this training, right, but just know that it is vice versa for the sell scenario. Between the high that formed and the last low, right, that is your range. So what you just want to do is to map out that range. First is what? The first thing you do is identify your trend. And how do you identify your trend? By a market structure break. If price breaks structure to the upside, it is telling you that the trend is bullish. So what you want to do is you look for a POI. Your POI is can either be your fair value gap. I would like to believe you guys know what fair value gap is, right? Do you guys know what fair value gap is? If you know what fair value gap is, just drop it in the comment box, right? So let me see if I can. Fair value gap. So your fair value gap, right? If you know what fair value gap is, can you type it in the comment box? Let's see what you have. Okay, we have. If you know what fair value gap is, just type it in the message box. Okay, I can see some messages already. Why is nobody typing in the message box? Come on, you guys should type now if you know what fair value gap is. I'd like to believe you guys know what fair value gap is. All right, fem confirmed. Which other person knows what fair value gap is? I can see it. I think it's from your hand though, because I would like to believe every other person can see my screen. If you can see my screen, please can you just signify? If you can see my screen, can you signify? All right, Francis can see my screen. Which other person? A lot of people can see my screen. So sarcasm is from your hand, right? So yes, now your fair value gap can be your point of interest strategy in what are they calling in ICT concept. Fair value gap is very, very important, right? Exactly. Sir Komolafe said it's a three candle formation, right? So if in case you don't know what fair value gap is, this is what fair value gap is, right? This is what it is. You see this eye, this particular candle, right? Just look at it. Let me zoom in a little bit. So the way fair value gap work is that the the shadow, you know what I mean by shadow, right? I'm talking about the wick of a particular candle, right? Let's say a candle body closed. After the candle closed, like after this candle closed now, right? You can clearly see that when this other long candle opened, it just moved upward. And after moving upward, when the next candle opened, the shadow, like that's the wick of this candle, it did not move all the way downward to touch the head of this other candle. If it had done that, then we wouldn't have had what we call the gap, right? So we wouldn't have had what we call the gap, but it did that, right? So he did that. So the space between this candle's eye and this other candle wick, not even coming all the way downward, right, to fill it in, right, is what we call the gap. And we can map that out and expect price to come back there later, right? So I'm still going to be dropping a whole full playlist on this. For those who don't have access to my, what are they calling it, my sharp pattern course, if you want to have access to it, it's also simple strategy, but yet it has 60% win rate, 60-70% win rate, back tested over the period of 4 months on FX replay, and the results still stand sure around like 60-70% win rate. I had the screenshot and I shared it with you guys, right? So now, without wasting much of our time, that is it. All right, this is 1 minute time frame. This is a 1 minute time frame. This is a 1 minute time frame. So let's just proceed, please. Let's just proceed. We don't really have much time on our side, and I want to cover a lot within the space of, within a very, very short space of time. Like within a very, very short space of time. So now, the first checklist is what? Trend. Second checklist is what? POI. Your POI strategy now, after identifying your trend, there's what we call dealing range, right? So between the last eye that formed now, and the last low that formed before price, broke a structure like this low now that formed before price broke this structural point, right? That's your dealing range between this eye now. Just map it out. So what you want to be looking for is a setup, a bullish setup, right, to form. And now the mistake that most people make when approaching spam money concept is that you can see a zone here, right? After identifying your trend, you can see a zone. Let's say you see a order block, a very, very nice order block, and then you start focusing on the other block too much, that price must touch that other block before you start looking for entry. But it's not like that. Here is the secret. Here is also another POI in smart money, in ICT, right? There are different criteria for POI, and all those criteria, like there is one important criteria there that if you understand, you know that it's not about your zone. There is even more to the fair value gap than the zone. The zone is a choice. Like the zone, after what are they calling it now, you must get it in context. We are still in trend and POI, not entry. So you must pay attention to the things that I'm saying based on the context we are referring it to. So now in entry now, zones can be very, very much more important than than in trend selection and POI selection. So now we are still in POI selection. So after selecting your POI, your fair value gap is very, very important, even than your zone. Price getting to your zone is a choice. So now, how do you know that price will reverse even when it did not get to your zone and it just got to your fair value gap? That is where the concept of market maker X model comes in. Market maker X model. So now, what is market maker X model? Don't worry, the video will be available. So if you in case if you are looking lost right now, okay, I'll have to draw the buy model. If you are looking lost right now, don't worry, you understand better. So this is what ICT market maker buy model look like. We have the market maker X model. The X there signifies, either buy or sell, right? So this is what the buy model look like, and I'll highlight everything properly out to you guys soon. So we have the accumulation, the reaccumulation, then we have the smart money reversal. More really that. Then we have the low risk entry, and we have the distribution phase. This is the market maker buy model now, right? These are ICT concepts, and we have the redistribution phase, which is now the final phase. Now, most people don't even know how to view this market maker X model, and it is the most important things, one of the most important things to understand in ICT concepts. Even though before you can say that you want to implement the daily power theory, for those people who have learned about ICT properly, you understand what I mean when I say daily power theory, or the weekly power theory, or liquidity sweep, right? Or engineering of liquidity. If you don't know this, you just be picking the wrong things in the market. And don't worry, when I put everything into context now, you understand properly, right? So this market maker X model is very, very important, right? It's very, very, very important. And it is the concept whereby every other concept is embedded in, right? So you must know it. Like you must, oh my god, come on. You must know it. Sorry, I'm trying to highlight this thing properly. All right. So now how does the market maker X model work, right? So this is the this is a buy model, right? That's why you see that the final point, which is this point over here, is higher than the starting point, right? So now what does this mean? It is a representation of how price move, how price delivery is on, a buy market. So now what is it telling you? It's telling you that, let's say price, let me just quickly draw a schematic here. This is a structural point, right? So here is a zone, and here is your fair value gap, right? So this is the way the buy model work. After price break every structural point, right, in a buy profile, it will first of all create a accumulation phase. Then it will drop down, create a reaccumulation phase, and after creating the reaccumulation phase, that is when you can now start expecting the smart money reversal. The smart money reversal is where price reverse. And if price, now you need to pay attention, if price have created this reaccumulation phase, eh and it created a smart money reversal. It is in this smart money reversal that you look for your confirmation entry or your entry, right? The moment price creates an entry after your reaccumulation phase, forget about it. It doesn't mean if it have touched your zone or not. It will reverse and it will go up. And I'll be showing you practical examples on the chart. We are currently on GBP USD. I back forward it to as far back as 2023, right? So it will reverse and it will go upward. So this is what most people don't understand. Now, what does this stuff look like? You guys need to understand a lot of things when it comes to ICT concepts. And there's a concept I developed to help us understand perspective, which is concept of noise in structure. I'll make sure I do something, which is I'm going to be creating a whole playlist around it, and I'll be sharing it into the group, right? So I already have most of all these videos ready in my channel already. So there are some of all these concepts that I already even taught in the sharp pattern course, concept of noise in structures. It will help you understand how to look for this market maker X model in the right perspective, right? So now your fair value gap has been filled. It created, a reaccumulation. Then it starts distributing after then. After creating a smart money reversal, it creates a low risk entry, then it distributes, and then it breaks another structure. So that's literally how this thing work. So now, the for what it looks like on the real life chart now, to identify your market maker X model on the real life chart, you might want to see after your structure got broken, right? After your structure got broken, sister, sister, oh, abeg, please, I'm on the meeting. Please don't be annoyed. All right, so how does this thing look like on a real life market? Like, how do you anticipate it? Sister Ife, oh, yeah, please, I'm in a meeting. Oh, I'm in a meeting. I'm in a meeting. All right, so how do you anticipate this in real life market? This is how you anticipate it in real life market. After every structure is broken, right? What you want to look for is you want to see price create this formation. Like, you must see price create like this formation that I just drew. This one. Once it creates it and then you see that it has broken a structure, then you can start anticipating, your entry, then your zone, and then that is what we call low risk entry, and then you anticipate a reversal to target the high. So as at the time of breaking this low, as at the time of creating this concept, this is your what are they calling it? Your accumulation phase. The moment price breaks this low, it will form your reaccumulation phase. And what you are anticipating next is smart money reversal after that breaking. And the smart money reversal create a low risk entry, which is where you anticipate your change of character in the perspective of the structures relating to this. Right? There are also going to be structures within this point, right? You are going to have structures, right, within this point. So you might want to see those structures get broken, change of character there relating to this strategy. Then you look for your entry and you buy. And this is what I call ICT concept in a nutshell. That's ICT concept. No stress, right? So now we have talked about market maker X model, which is this guy. We have talked about the concept, right? What you just want to look for is any structure. You don't need to complicate it by saying that this and that, kinikon, kinikon. You see this structure, swing structure, substructure, kinikon. Don't do that, right? You want to make sure your trading is as smooth as possible. Once you can see your structure, that it is any structure at all, either in context or out of context, if you can see this market maker X model form within that structure, it is telling you that, and after you see it form, you see that there is an entry for you. Hmm? Do you know what that means? You see that there is an entry for you, it form an entry like a smart money reversal entry for you, then forget about it. The chances of it playing out is very, very high. Like, it's very, very high. So after you enter, your exit will be at the top. It can reaccumulate, it can redistribute, it can create. I don't know if you are getting it now. So now, that is it for that. Let me now come and show you guys what it looks like on this schematic now. So on this schematic, this is the way it looks like. All right, so now let me show it to you guys on this schematic. So now this is the way it will look like over here. You anticipate something like this. Then after breaking this low, it might have tapped into this fair value gap, but make sure that institutional pricing is there, right? Which means in the perspective of this dealing range, which is between this high and this low, right? It have reached at least beyond 50%, right? And you can see it vividly. Then you can now anticipate either a failure swing to form, you know, within that range, and then you draw your zone after it break, and then you enter your trade targeting the high, right? So that's the way it works, and this is also applicable. It might just reach what you want to be looking for reversal and for your entry now. What you want to look for is that the market maker X model have completely formed. And how do you know that? It will create a low, create a high, and then break that low. If it haven't break the low, it's not a sweep, clear break. If it haven't break it with the candle body, don't look for an entry. But as far as it have broken it with the candle body, you can always look for your entry, and you will notice that you are getting nice trade with nice risk to reward ratio, right? So, and the market is fractal. So this is applicable to any break or structure. After price has broken this structure over here, you can be like, okay, let me even go to the smaller time frame and look for the same model, which is market maker X model. Then you look for another entry on a smaller perspective and you enter for the reversal. And this is smart money, this is ICT concept, right? It might look so simple now, or it might look as if I'm not teaching ICT concept. Why? Because I've only mentioned market maker X model, fair value gap, I've mentioned dealing range, but I'm not using some other terminologies like open float or liquidity pool or liquidity void, right? Liquidity void is relating to fair value gap. I don't need to use those big grammar. If I want to explain how the mechanism of this whole structure work and why it work, that is when the behind the scenes, that is when I'll be using these terminologies that, okay, yes, this I, because price broke this I, we have an open float there, then there is a liquidity pool resting above those I. Then, we are talking about sell side liquidity, buy side liquidity, all those stuff. This low like this low that you see over here is what we call a sell side liquidity. And price breaking this, it might be during a London session that it will break it and then reverse. Who knows, right? Most people don't even know how to approach session when they are coming to ICT concept, which is a problem. Right? They don't know that session is not for you to forecast the market, it's for you to know when to avoid the market. So when they are telling you that there is always a manipulation by social time, this one, if it's a day trade now, let's say your look back period is a day trade, right? If it's a day trade, you might just see that this is your accumulation, right? This is your Asian session. This whole place like this, your Asian session. Then price will just sweep this low during London for manipulation. Then you get an entry for distribution. But it doesn't mean that London session will always sweep the low. London session can decide that it won't. There are times it does. So how do you use session? You don't use session to forecast. You use session to know when not to be in the market. So you knowing that price can sweep this low during London session means that if you are seeing a zone here, you want to avoid it if it is not yet 8 o'clock in London Nigerian time. I don't know if you are getting it now. So that is just it. Regardless of London session or whatever, this is just the profile. This is how you approach my money concept. So simple. Like this market maker X model is a game changer. Just take a look at it again. Take a look at it once again. A break or structure, then just okay, now without just wasting much of our time, let's dive into the real chart and let's see live example. Is there one thing that I haven't talked about? Let me check my phone. I have a course outline on it. So internal and external liquidity, I don't need to explain that too much. Internal liquidity is typically any liquidity that is within the range, that is inside the range, like your fair value gap, right? Or this low that formed inside it. I don't know if you are like your fair value gap, sha. Just fair value gap, not even that low. Fair value gap. So, and external liquidity is typically referring to liquidity pool, right? It's literally referring to liquidity pool, and liquidity pool is like orders resting above a particular high where there is an open float. Open float is the open interest of smart money in a particular direction of the market. So now there's one more concept that I want to teach, which is PDRE metrics, but I'll be teaching that if time permits, right? So, and concept of noise in structures, I'm going to be dropping that video, right? But with this that I've taught you guys tonight, you guys should be able to start picking profitable setup. So that concept of noise is a very, very big game changer, right? It will help you understand time frame selection, like no stress. You don't need to start saying that, okay, there is a secret time frame that, okay, once you are analyzing on 1 hour, then 5 minutes is the next time frame you go to look for entry. No, it's not about time frame, it's about perspective, it's about noise. So if you can see the noise clearly, there are times whereby the noise will not be, there are times whereby your entry will not be for 15 minutes. It is specifically 5 minutes. And that is where the concept of noise come in. Because once you can identify noise in the market, you know where your entry is meant to be. Sometimes your entry is not meant to be for 5 minutes, it's meant to be 15 minutes. Your trend aligning time frame where you saw your setup can be like 1 hour, and your entry is just totally different, right? So you need to make sure you know how to pay very close attention to that, right? So now, without without wasting much of our time, let's dive into what the real life chart of it literally looks like. Remember, trend first, which is your break or structure, any break or structure at all. Then POI selection is where the fair value gap comes in. If there's any zone, price can retrace deep into the zone, but make sure that even though if it is retracing deep, the only thing, if it have not formed the market maker X model complete, don't even look to enter, just avoid it. And if you notice, most setups that just drain downward like that, they are not always for you, they're always against you. They will most likely sweep your zone out. So you want to look for POI trend selection first, break or structure, select the dealing range, POI selection, fair value gap, and entry strategy. POI selection is also, market maker X model. Then entry strategy will now be your, after the market maker X model low has been broken, it can sweep this low, it can be an old low, it can be a previous day low, who knows, any low, but it must look like this. That's the point. Relating to this whole perspective, then you can look for your entry. It can be a failure swing, it can be a break, change of character, normal change of character. Then you just enter and then target the eye. This eye will be a target. This other eye will also be a target, right? So now let's dive into the real life charts without wasting much of our time. 15-minute time frame. So thank God this is FX replay, right? This is FX replay. Oh, come on. Don't play me, please. This is FX replay, so it's easy. So now for a very, very quick and easy example, this is this is a very, very typical example of what I'm talking about. Just ignore those guys, right? I mean, like, ignore whatever is happening around this end. Just ignore it, please. Right? So what I can see, like I said, any break or structure at all, right? I want to give an example now. So we have a bullish break or structure over here. The trend is bullish, clearly. We have identified our trend. So what's the next? POI selection. Where's our POI? We have a nice zone here, right? So before that zone, after that zone, before the break of structure, we have a fair value gap here that we are looking for price that, okay, come and fill it to. Where is that fair value gap selection to save? That's our fair value gap. So we are literally expecting what? We're expecting price to come into our zone, right? This is our dealing range. We are not expecting price to go beyond this high and low. Like beyond this low, it's a bullish break of structure. So this low is represented as a strong low. We want to see it reach somewhere around the discount because this is a buy trade, and then reverse. So now what are you looking for next? You go to what I call the medium noise time frame relating to this perspective. And now I will just try as much as possible to explain the concept of noise to us without really stressing it too much. So now the concept of noise in structure refers to a structural this the price particular price point in structure, right? Before price broke structure, right? That price leg that broke structure. If you can see the structure, if you can see the structure within that structure, you are you are on a medium noise time frame. If you cannot see the structure, like now over here, we cannot even see the structure. We cannot see the structure. Can you see any structure within these structures? No. We can just see green candles going upward. So we are on a no noise time frame. There is no noise at all. But the moment you can begin to see the first structure, like first dimension perspective structure, you're on a medium noise, right? So, but now what we call a large noise is you need to understand no noise, medium noise, and large noise. So what we call a large noise is typically when you have something relating to this, like I've just explained no noise to you guys. When you cannot see the structures within that price leg that broke structure, you are on a no noise time frame. When you can see the structure, you're on a medium noise time frame. So now there's what we call large noise, which is what you want to avoid. So now let's say this is a structure, right? So this is a normal price leg that broke a structure, right? So I'm drawing it in perspective, so don't get confused. If you can just see this one line, you cannot see this other line that is zigzag inside, right? You're on a no noise. But the moment you start seeing this second dimension perspective, which is like a second structures within the structures that break that structure, you're on a medium noise. But the moment you start seeing the structures within the structure of that structure, right, you start seeing a third perspective, right, just know that you're on a large noise. So what you want to do is that you want to avoid large noise as much as possible. Just avoid, I don't know if you get it like this. So that's the concept of noise. Avoid large noise as much as possible. So now over here now, we are currently on the medium noise time frame. On the medium noise time frame, you can spot out your zone, right? Your other blocks, right? Your fair value gap, you can spot it out there. So now we're on the medium noise time frame, and as you can see, between our dealing rate now, this high and this low, price has been coming downward. What can you see over here? we can start seeing the market maker X model form. What did I say that should happen? Price must first create a low, then create a high, then break that low. So after you break the low, you start looking for entry. But over here, unfortunately, there must have not been an entry. So it can create a fourth break. So sometimes it can be more than four, right? It can be more than just, one, two, right? It can create a third break sometimes. But after that low got broken, you see this one, it touched the zone, right? So after this low got broken now, right? After you have seen that, okay, yes, this one has been broken, or let's say after this guy got broken, sorry about that. After we had this got broken, you want to start hunting for your entry. After it has sweep this low, you want to start hunting for entry. And how do you hunt for entry? You take a look at this perspective. Where is it? You take a look at after this last break, you take a look at, oh my god, come on, don't stress me. Don't stress me, bro. You take a look at this perspective, right? The structures, you take a look at the structure within this particular point, and that's what you use in looking for your change of character to enter for your buy to target the eye, right? So now, after this low break, now this low has gotten broken, right? It break it with a candle body close. So we have now seen our market maker X model form clearly. If you want to anticipate your market maker X model, the best time frame to anticipate it is on the medium noise time frame, which means the medium structural perspective. You look at this structural point that broke that structure. Can you see the structure within it? If you can see the second dimension perspective, which is what I just explained, you can see the structure within it, but you cannot see the structure within the structure or within that price leg that broke that structure. Then you are on the right place to look for your, what are they calling. So now I think this 5 minutes now I cannot even see the structures within it. So let me just drop to 3 minutes. So on 3 minutes we should be able to get something nice. So on 3 minutes we're able to see it properly. We're able to see this structure now. You guys can see that, right? So these are medium range time frame, but I cannot see the structures like that is forming those structures. Like now as it is going downward, yeah, it should be able to see some structures, right? I cannot see them. So I'm very, very clear that I'm on the medium noise time frame, right? So now this was the first point, it break a low, right? We are now having our market maker X model form. This is our accumulation phase, this is our reaccumulation phase, and now we're expecting our smart money reversal to happen for us to buy. So after you have seen your market maker X model form, right? The purpose of medium noise time frame is only for market maker X model. Once it has formed, you want to go to the medium noise time frame relating to the price leg that broke through the relating to this price leg. Now you now go to the medium time frame of this one, medium noise time frame, and that should be like 1 minute relating to this setup now. uh, you see, I'm operating based on noise. I'm not just operating based on anyhow thing. We're almost done, guys. So we're almost done. So it have touched the higher time frame fair value gap. So now on this guy, now this is the medium time frame because I can see the structure. I can this is the break of structure, right? The last break of structure. So I can see the structures like within this structure, right? It will be raised up over here. Then over here, sef, it kind of looked as if it break, but it did not really break. So we don't have had an entry until it broke this low again. So we now had like two reaccumulation phase. We have accumulation, we have reaccumulation, we have another reaccumulation again because it broke this low again. So after the second reaccumulation, what are you doing? You're also applying the same concept, coming to the medium noise time frame relating to this. And as you can see on the medium noise time frame relating to this, after price swept this low, after price swept this low over here, what are we now looking for? We are looking for an entry. And the entry can either be in form of a change of character or a failure swing. I'm not doing that. So you can see we had this last structural point. Price broke it, right? It broke this high again over here. And this would have been our entry. So now as price broke this high over here, I don't know if you guys are following. As price broke this high over here, this is now our entry. And what do you want to look for next after price break a particular point? You want to look for fair value gap and order block. This is our order block. This last bearish candle, further impulsive move upward. Let me delete this guy. So this is our order block. This is our zone, right? So we had a fair value gap within that range. There's a fair value gap, as you can see, this particular candle low and between that point. Then you can enter from the zone. And one thing about ICT concept is that it has a very, very high win rate. Enter, and after entering, you are targeting the what? The overall high. Like that's your liquidity pool. And take a look at the way price moved. Price moved. Remember, trade management is important, guys. Is important. And you can do this with any structure anywhere, right? Any structure you see. First thing you shall need to identify is your trend, right? I don't know. Can we all see that? You can see price is currently somewhere around here. So let me just play price. Let me play price. Let me change it to like, okay, this we are on the 1 minute time frame safe. I don't want to make it too fast. Let me play price and let's see how price move. Okay, price later came downward. So that I would have been out naturally. Like now break even be that. Because that kind of big move is what I called the big retracement. Like is what where my big retracement theory is like so applicable. So let's just watch price play. Let's see if it's finally smashed TP, which I'm anticipating that it does. So market can be so frustrating, and here is a very, very typical example. You don't want to be in frustrating market. There's always this saying that see, what will help you will not stress you, right? So if you are in a market that is stressing you, it's a sign that it's not your trade. Like just leave it alone. Just get out of it. Like take your profit. Nobody will beat you. The only thing that you cannot suffer for in the market is taking profit. Either you take it at full TP or maybe you did not even reach full TP. Like who gives a shit? It adds extra what are they calling to your account. I personally I wouldn't still be in this trade. Like I mean something I've almost reached my TP and then it's now reversed. Come on, what the heck is that? So but I don't know if you guys get that. That is one example. Let me see if I can find a live example that I can play, then we'll call it a day for tonight. If you guys have any question, I think you guys should have start penning it down by now. I'm expecting you guys to have start putting your questions down, right? So here is also another typical example. Like it's very, very simple, guys. Just structure first, your trend first. After your trend, look for your POI, fair value gap, right? Remember, you're relating to trend now. Any structure that you see that you are using to map out your trend, it's not compulsory for the zone to be tapped. What you want to see is your market maker X model. After your market maker X model has formed, look for your entry. Your entry is the only one that has a compulsory, even though on entry itself, you can enter based on consequence encroachment, which is like entering from the fair value gap, the middle of the fair value gap, but your stop loss will still be under the zone, right? So, but that one sef it just increases, it decreases your RR a little bit. So now let's play it. Let's play price. Let's see what price has to offer us. Let's see if we can get a setup on 15 minutes. I just want to give an example. Then you can see the setup later. It later went upward. Okay, it came downward back. So nice. We currently have now based on this trend. Now let me go to the 1 hour. Based on this trend now, I can literally say that we are bearish, right? You don't need to stress yourself highlighting trend. Like whenever you just see your trend, just map it out. Maybe it's on a zone or whatever, it doesn't concern you, right? But you can do your top to down analysis to ball. It's not like I noticed that I noticed that one thing about the market is that once the market has showed you its trend, the trend is your friend. It's always easily move in the direction. So what you want to do is to create concepts that will effectively work around the trend. So now this is a zone now. Here is a very, very typical example. This is a structure. This is a zone. Price broke this low. So these are dealing range between this high and this low. So we're expecting our market maker X model to form in this perspective. Then we'll look for a sell to sell. Right. So after this one, I'll be taking questions and all right. So now as we have this zone over here now, some people might be thinking that okay, yes, when price gets here, it cannot sweep it. Some zones can be swept, and yet still the direction is still valid as far as it haven't break the dealing range, which is the highest point and the lowest point in price, right? It's possible. It's very, very possible, right? So you need to pay attention to that. That's why the market maker X model is important. Now I cannot see any X model form yet. I can just see a straight wide equivalent. Let me go to the medium noise time frame. Now I can just see one I can just see one swing point. I cannot see the structures within this price leg that broke the structure. So let me enter 15 minutes. Maybe I'll see it. Right. Remember, institutional pricing is also part of it. Okay, yes. I'm literally now on the medium rest time frame, and that zone we mapped out. The best, by the way, the best place to map out your zones, your other blocks, is always either the medium noise time frame, or the, what are they calling it, or the no noise time, or the no noise time frame, right? Or the no noise perspective. So now I can literally see the market maker X model formed, but I missed out on it. I literally missed out on it. So you guys can see this, right? Sometimes it won't always look big, right? This small downward red candle is your reaccumulation. Then it went upward, and then it created a small money reversal point. So this small money reversal point now is the break of this eye. So at the break of that eye, I want to go to a smaller time frame. After I've identified, after trend, go to your medium noise time frame to look at your to look for your, what are they calling it, your market maker X model form in the proper perspective. After your market maker X model has formed, you want to start going to a medium nice time frame relating to the last structural point, which is this low now. Relating to this last structural point that broke that high to form the market maker X model last point, then you look for your entry and sell from there, right? Ah, come on. Why is it that undo cannot be cannot be redo cannot be done on trading view? All right, so we have this break. Now moving to the smaller time frame, which is 5 minutes, relating to this perspective. And as you can see, we had a typical entry after the break of this high. What are we looking for? This, remember, this is our accumulation second phase. You must see it like, you must see that it creates a low, then it now break it backward, upward. And remember, the time frame you are looking for this scene is your medium noise related perspective. If you are not applying this, you might be seeing too many breaks and you not even know when to look for your entry. And remember, institutional pricing is also important. So now there it is. Accumulation, reaccumulation, then we are expecting what? Small money reversal, low risk entry. It is creating distribution phase over here, right? So the distribution phase can be where you enter for your continuation trade. So now here it is. I can see, okay, okay. All right. So if you can still see my screen, can you just signify, please? I'm hoping that the audio in this particular recording, everything is still intact. I'm hoping. All right. So this was what I was talking about the other time, that it's not about time frame. Like, it's all about noise and perspective, right? So now we came all the way from 1 hour, right? We had our dealing range. We identified this other block. There was a fair value gap. Oh, don't think that there wasn't a fair value gap. This is a very, very nice and beautiful fair value gap, right? So price might is even a liquidity void, right? Liquidity void is like a larger version of fair value gap. It's just, you just see series of candles that are not even waiting for each other. But fair value gap is always relating to just one side. So on the 1 hour, we dived into 15 minutes. From 15 minutes, come on now, I've clicked on 15 minutes. So from 15 minutes, we were anticipating something that is quite different. We are on the medium noise time frame, medium noise perspective on the 15 minutes, so it was like quite different. So we had our accumulation, we have our reaccumulation phase, then we're expecting small money reversal, right? So we had the break of this eye, and after the break of this eye, what are we expecting? A entry to probably drop. What if you miss the entry? You can always take continuation entry, and don't worry, I'll talk about that very soon. 5 minutes, all the way from 1 hour, we are now on 5 minutes, right? So now the break of this eye now is our last point, like after the you know accumulation, the reaccumulation phase. You look at the structures within that point. It doesn't have any structure. So if it doesn't have structure, what are you expecting? At least a failure swing to happen. If a particular point doesn't have structure after a market maker X model has formed, you are expecting a failure swing to happen. So, and I think that was what happened over here. This is a failure swing because price did not break any structure from this point. Price just dropped downward, then it failed to break this low, right? And then it broke this that low that failed to break that low, right? So this is what I call a failure swing. And after the failure swings form, sorry, but after the failure swings form, you look for your fair value gap, which is now this particular point, and then you draw out the zone, right? You draw out the zone, and our zone is this guy in particular. So now let's just see how price treats us. You know, you might want to go downward to a smaller perspective relating to this if you want to catch a very, very much more faster entry, right? Let's say 3 minutes. 3 minutes is much more crazy. Like now, in 3 minutes now, you can even see the medium time frame structures of this. So it created a failure swing here. You could have been in it, and then you could have started riding it even right from there, right? So, but over here, let's go back to our 5 minutes. This is what we see, right? So, but naturally, after the last swing point of the market maker is model is broken, you want to look for, you know, the medium nice time frame relating to this. You get. So now you enter, let's place our order here. Let's say I treats us, guys. By the way, if this is a loss, don't start thinking the strategy doesn't work. It works. I backtested the net enough, and losing is part of trading, regardless of your strategy. So it's just that win rate matters, and this strategy has over 60% win rate. So the chances of this even being a loss is less likely going to happen. All right. So Alt M 3%. No, I'm making it a limit order. This is the benefit of FS replay. So if you don't know about FS replay, like this is a backtesting tool. Very, very good. So now let's see how price treats us on this and we'll call it a day, guys. Okay, it's coming upward, coming to tag us in. Funny enough, it might not tag us in. Okay, it's a loss. As you guys can see, it was a loss. Fantastic. So as it is a loss like that, let's see another perspective of it. But if you have gotten it from that first point, you would have been in profit. We are still within that range, right? So let's enter into this guy. Let's enter into a larger perspective and let's look at what is happening. Let's pre-price. As it is a loss like that, we cannot just enter a trade straight up. Okay, now you see, it swept this zone. This was what I was saying. It's not about your zone, right? It's about the dealing range, your fair value gap, right? It can sweep your zone, but yet still the setup is still valid, right? It's not a free tool, it's a paid tool. You have to pay to access it. But I think they also offer free, what are they calling it? So now after price break this high, what do I say about market maker X model? This is what you want to see to validate your market maker X model. We have this high, you see, and then it broke it. So this is our accumulation, this is our accumulation. Then we are expecting the small money reversal point now, right? So now after the break of this third point, what am I saying? After the break, what are you looking for? You are going to go to the medium noise perspective relating to this break, right? And if we are to look at that medium noise perspective, it is looking as if we are even currently on it. So you identify the last structural point, which is this low, and then you anticipate that, okay, it get broken, or if price did not break it, it creates a failure swing point that we can then enter our trade from and anticipate a downward movement. I don't know if you guys are getting it like that. So now we are looking at this low to be broken. Let's play price. Market can be annoying sometimes, right? So, all right, what am I saying? Is this a break? Okay, I think it broke this high, but it haven't. If it break this low now, then I will now say that, okay, yes, I have a entry. All right, it broke it. So that's our entry. That's our entry trigger. You see, it broke the structural point, right? It broke the structural point. It broke this, like this is what ICT will call you as, it will tell you as an engineering of liquidity, right? And you are wondering why your zone gets swept off because you are relying on zone. but it's not like that. The key is market maker X model and entry, right? It can sweep any, it can engineer liquidity from anywhere. So now looking at this point, we have a nice fair value gap from here. Very, very nice fair value gap, right? So we could have said that we want to enter from here. It's currently there, so I'll just enter at instant market execution. Let's hope that this is a very, very good example for this, and then we'll call it a night and it's not a loss, right? Remember, trend identification, POI selection, market maker X model, then what? Then entry or market execution. Yes, 3%. So we are currently in this trade. Let's see how it treats us. We are currently running in profits. Can you see that? So trade management is important. So as at this point, as it broke this low, I might have set my break even, right? So let's just watch price. Let's see price move. Why is this thing threatening me like this? Simulation is over. Would you like to? No, no, not yet. Please stay here. Okay, this was the limit I set. Oh, I set it to this point. But I don't know. You guys get the whole perspective like that, right? So these are you pick trades over and over and over again in the market using ICT concept. This I now, it can be the previous day I, it can be previous week. Okay, this was Tuesday. Now take a look at it, Wednesday. And normally on, if you are looking at the bottom of the screen here, right? So you see this was Tuesday's I, right? So Wednesday is like intra-week market reversal or normal. What they call, but you don't need to know all those stuff. All you just need to know is your technical analysis chart, your structural points, trend identification, market maker X model relating to the concept of noise. Then you look for your entry, and then you watch your trade pan out, like, and you watch it pan out. How I wish. Oh, I think this is the free version. No, yeah, it's the free version. So this is one of the issues that you have when you are using the free version of this. I once had the paid version. I think I had the paid version safe, but it's a free account that I'm using right now. Oh my god. Yeah, but you guys get it right. You guys get the concept right. Um One thing I'll be doing is that I'll be sharing more signals during the week, right? So one thing you want to do as a trader is that you must keep yourself focused. And when it comes to focus, you trade one pair, don't trade more than two pair. I don't recommend that. Like all the money you want to make is in one pair. You can make it in one pair. Trade one pair. Have one risk management. I advise not risking more than 2% of your account, 2 to 3%. That's the best. It will help you stay far away from blowing your account as much as possible. So the standard risk management is between 1 to 5% of your account, but I recommend between 1 to 3%. In fact, 2%. You see, you can do a lot with 2%. This is a trade setup of 1:5. And as a day trader that I am, I can easily catch 1:5 over and over again in a day. So if I'm risking 2% of my account, 2 times 5 is 10. I've made 10% in that day. If I had like 3 winning trades of like 1:5 in a week, that's like how much? That's 30% of my equity. Let's say I have a $1,000 account. I've made $300 that week. So you don't need to stress it. In a month, you do over 100% of your account just by understanding risk management. But let's say you were in a crazy loss and you were risking that 2% back to back. Let's say you had 10 losing trade, which is the worst ever kind of loss I can ever see. 2 times 10 is what? 20. You have only lost 20% of your account. You still have 80% to trade with. And there is no how, once you have one profit, you recover everything back. So it's about patience and about knowing what you want to do, right? So any questions so far, guys? If you have any questions so far, can you just do what to ask right now? Any questions so far? If you have any question, unmute your mic. Okay, but you guys understand, ba? So Divine, yes. Do you have any? Okay, it's not really possible right now. I wish you are just seeing the screen. Wow, I wish it is. I wish it's. I wish it's. I wish it is. I wish it is possible. but right now we have currently reached the limit. Eh, so you understand a lot of things. So we are still going to be having like, yeah. So we are still going to be having this unveiling the market series once again, but that will be next month. So if you're having any question, it will only be once in a month, and it will get to a time whereby if it is like it will only be for my inner people, because tonight I allowed a lot of people to join, people from my people that have been with my brand for a very very long period of time, people from other groups and communities. They joined tonight. We had like over 12 participants, right? So that joined tonight. So some of them are from some other communities, but later on it's going to be for specifically people that are in my community. So if you want to join my community and you want to have a benefit with my signal services and every other thing, you can do well to send me a message on WhatsApp. I think you guys have my WhatsApp line. It was the one I used in sending those stuff. So, and if you are interested in signal services, I also offer signal services. You can do well to send me a message. You can do well to send me a message. If you want to learn about financial markets, I have a course on it. So you can do well to send me a message. And if you are interested in portfolio management, my portfolio management services start from $50,000 and above. So if you have as large as that and you don't know where to put the money, don't worry. You can send me a message. Let's have a conversation and we'll talk things out, and we'll discuss T and C's, right? So, and if you want to learn about trading, right, I'm available. This strategy has a very, very high win rate, right? So that's also, we're also going to be having unveiling the markets. This is specifically for my brand. My brand is going to be launching by February, officially by February. It has been around for like years now, right? So, but the first official launch whereby it will start working properly is starting from February next month. So we are going to be having sessions like this, educative sessions like this, mentorship sessions, signal services room. If you want to learn advanced stuff relating to the financial market like macroeconomics and microeconomics, you want to start learning fundamental analysis and understanding it properly, interest rates, inflation, all these things, how it affects your trading. If you want to become a pro in trading, that you need to come to my brand, Stefan Financials. That's the name. So that was just all for tonight. Hope you guys learned something, and I'll be looking forward to see you guys in the next session. Right. So any other thing so far from any other all right. Does any other person have any other thing to say? All right. All right. See you all later. Good night to you all and bye for now.